With the sell-off that we're seeing today in the S&P, the first question that's coming to my mind is the S&P no longer buy the dippable? Because once we had the green trend show up, all of a sudden we know that the lines of the wave become a potential pullback zone. This is classic buy the dip. One of the things that continues to be a problem for us in the ES is the lack of a breakthrough through the 200 and the volume weighted average price. So one of the things I would recommend as you're going through futures contracts, as you're going through ETFs, sectors, stocks, contrast the S&Ps of the world where you have price action below the volume weighted average price and below the 200. So that I use a 200 propulsion, which is a combination of an 8 exponential moving average crossing the 200, right? Ask yourself, wouldn't I be better off buying the dip in the Dow? And that is true. Today, the Dow is pulled back to the 21 propulsion. That is the 8 EMA crossing the 21. And yes, that would be a much more interesting, a much more useful potential pullback because of not just the structure, but where price is in relation to, as I like to call it, the barometer, right? And meaning being above the 200 and being above the first of the year anchored VWAP carries with it more bullishness than if it's below it. So that's another advantage the Dow has over the S&P. All right. I want to also take a look at crude oil with you all, because while crude oil has nothing to do with a trend, it has a lot to do with CHOP. Crude oil has moved down for 3 sessions swiftly, right back to Darvis support. By the way, in a neutral environment, and we are still looking at volume-based support at and just above the -2 standard deviation of the V-score. So imagine pulling a standard deviation of the volume-weighted average price. This one's anchored to the first trading day of the year. All right? That's volume-derived support. We have price-derived support here at the Darvis, and a neutral market that validates looking for a potential oversold buy. Now, if I'm looking for an oversold buy, or for those of you that are curious, what would I use? Take a look at a slow stochastic. And you'll see it's been bouncing along the 20 or the low of this slow stow for a bit. All right, it hasn't really popped that much, but it has been bouncing in this area, telling us that yes, we are indeed oversold. I'll wait for a pattern to form here. I simply won't buy jumping in here, but I do want to remind everybody you can go micro, options on crude oil full-size contract, as well as the USO. Now, I want to spend a moment to remind everybody, when you are trading overnight with expectation for maybe a hold for days, if not weeks, you want to make sure that you have enough time before first notice date. The open interest is what we're interested in. Right now, the open interest is in January, but I might look to February where there is sufficient open interest in crude. If I'm day trading, I'm going to follow volume. And right now, the January 2023 contract is where the volume is at. And by the way, it's where the bulk of the open interest is at. But the problem is first notice date for January, I believe, is inside 2 weeks or right at 2 weeks. No, it's 16 days to first notice date. If I believe I'm going to want to hold this for more than, say, 12 to 14 calendar days, I'm going to want to go out into February. So the safer bet would be to go out into February, but you could focus on January. But remember, we don't have a lot of time before expiration. So this is what the CLF contract looks like. This is what the CLG contract looks like. They look virtually identical. So the same pattern can be used. So keep that in mind when you're thinking about the contracts and how much time do I have to first notice date, and do I have sufficient open interest in that contract. We'll talk a little bit more about crude oil. We'll talk a little bit more about the XLE, Exxon, as well as bonds in the premium video. All right. I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.